Lady got too fat and died and had to cut a hole inside the house and drag her out. I could use a good ass whipping. Salem and massive good ones. Hello, one day is Thursday, January 29th, 2026, and this is the week and charts. Obviously, I want to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule to be here. Hopefully, I could resolve some of the issues of getting the word out. Oh, shoot. So what are we going to talk about? Well, obviously, current market conditions, as usual, I have a lot to say about that. Your questions on trading, your favorite stock and crypto picks, feel free to type those in now. If it's crypto, put USD after it so I know what you're looking for. I want to continue, and I think from now on or forever, I'm going to continue with the methodology in action. One thing that was kind of cool when I was going live is just noticing these examples will form a mystery charts from sometimes 8 months ago. And you could see all that in real time in the trading service, and you could see it slightly delayed on YouTube. And I think it's a great way to learn how to trade, is to see what somebody's doing, actually doing, and repeat it. And that's really the secret to anything in life. Find somebody who's making it and then follow them. And one thing I was thinking about earlier is I was talking to my wife. She goes, "What do you talk about?" I explained the resolutions and all this other stuff. And one thing I told her, it's like, and it comes out that I'm really emotional in all this. And I talked about the ups and downs. And today's there's some ups and downs, and how I'm really too emotional to trade. And I think that everyone thinks that once you reach a certain level, a switch is going to flip, and you no longer have all these emotions and all. But you're still human, and you will have a lot of emotions. And I know people who run billions of dollars, or used to know people who run billions of dollars. And one time they were in a drawdown, and this fellow trader friend of mine was pointing out how bad he was doing and everything. And it's like, well, I'm sure you don't need to do that because he already knows. And just, even though this person is very stoic, the money manager, I know that deep down he was feeling those losses and feeling that pressure. Anyway, we're going to get to all that and flesh that out quite a bit. I'm going to continue with the trading resolutions, and that's where a lot of these random thoughts that are just kind of bubbling up come from. And that'll make a lot more sense in 1 minute. I should wait to tell you what I'm going to tell you instead of tell you before I tell you. All right, this disclaimer screen, as you know, you can lose money trading, or as I often simply sum it up, all predictions about the future and a lot of stuff can happen between now and then. Amen. My brother from another mother, Greg Morris. There's all my contact information. You can also reach me at dave@davelandry.com. I answer all my emails eventually. All right, as I've said 10,000 times, maybe more, the missing piece for me early in my trading career was a bit of a show me. I had some success here and some success there, and a few trades that allowed me to continue living, continue to survive, so to speak, maybe 6 or 8 months. And the thing, it really didn't click with me until I started seeing other traders. I became part of, I did some consulting and some system programming, and then I became part of trading markets. And it was very helpful, especially since I worked very closely with some other traders and worked with a hedge fund too, to see them actually make trades, and to see that my emotions were normal and what I was doing was normal, and the ups and downs were normal, and you don't always make money and all these other things. So that's what I really want to bring to you. And one thing I was thinking about right before I went live again is that I don't have the Holy Grail. Nobody has the Holy Grail. If somebody tells you they've got this magical system, run, don't walk away. But what I think I really can do is I think I could teach you how to trade and how to become profitable. And there's been a lot of people that have taken my stuff and done pretty well with it, and then they go on to do other things, arbitrage, hedge funds, some of them are television personalities, etc. And I'm not telling you this to brag. I'm just trying to point out that you can do okay longer term, okay, with a lot of this stuff. And like just one setup, for instance, that triggered, and we were in the hole for like 8 or 9 days, and somebody raked me over the coals for that one. It's like, well, it happens. That's just part of the territory. You have to suck it up, buttercup, and live with with these open losses sometimes to get to the good stuff. And then fortunately that trade came back. And we'll take a look at that in just 1 second. Anyway, we have a smoke if you got him report, sort of. I haven't fully confirmed that it actually traded at the initial profit target, but I did exercise a little discretion on my own and take partial profits early. And by the way, if you're on a trading service, make sure you're in the Facebook group, because I will talk about when I'm using discretion. One thing I was thinking about recently, and quite often, as a matter of fact, is that it's really hard to give everyone all the exacts when it comes to trading, okay? Get in here, put a stop here, initial profit target here. Sometimes it works out beautifully, but other times it's like, it's kind of close to the initial profit target. Maybe we better take profits a little early just in case. And there's always a little discretion, not always, but a lot of times there's discretion that can be used, and it's a very minor thing. Like it might be like letting a stop get nicked, and then let's say a stock closes poorly on a Monday and you come in on Tuesday, you know your stop is like right below that low. You know you're going to get hit in early trading, but there's a chance that it might reverse. So you might want to let it open, let that range get established. So a little discretion here and there helps. And I think that my added value is I could go in and say, okay, here's where I'm using a little discretion. I think you should too if you're a little bit more disciplined. And sometimes it works and sometimes it doesn't. Anyway, former mystery charts, MDLN. These are straight from the trading service, davelandry.com/archives or youtube.com/Dave Landry if you want to see them a little bit more newer, and davelandry.com/trading service if you want to see them real time. Anyway, that's the parameters down below, MDLN. So that gives us an entry, protective stop, and initial profit target up here. This is what I call a first deep retracement. With IPOs, sometimes they take off straight out the box. They have these massive corrections. There's a lot of insiders that are unloading and dumping stock. And when I say insiders, maybe not official company insiders, but let's just say people who got shares pre-market, okay, before it came public, I should say. They're looking to get out. They're looking to flip it out and make a little money quickly. So you have a lot of that crowd. You have a lot of people that just kind of rush in at any cost and buy it, and then they get spit out when you have like a deep retracement like this. So it's one of my favorite IPO patterns for higher price IPOs. Lower price IPOs too, but usually with the lower price IPOs, the buy at B is a much more, what do I want to say, exciting, but it'll get you in a lot earlier, and sometimes the market can really take off. But with the higher price ones, I find you're better off letting them open up and trade for a while and take a secondary setup. Okay, a secondary setup is something like a generic pullback, a first deep retracement like this, Landry-like pullback once you have a moving average in the works, etc. And a pioneer setup is like early trading, which could be as early as day 5, would be something like a buy at B. So anyway, so you can see after a few days it triggers, and then it begins to slowly work its way higher. Now, I did take partial profits on this day here, and also on this day here in another account. This was in the model account, and this was in one of my bigger accounts. I just could not look at such big gains so close to the initial profit target. I felt like I was splitting hairs. Okay, an extra couple $100 as opposed to letting all that profit evaporate, God forbid. But anyway, according to several charting services, it did hit the IPT. I don't have time and sales anymore, so I can't dig out that data. But if somebody would like to dig it out for me, that'd be great. They can show me the trades on January 28th and let me know if it actually got to 46.90. But even if it didn't, in a case like this, I would suggest a little discretion, and that's why I mentioned in Facebook that I was taking profits a little early. Okay, so this was a former mystery chart. We're going to come back to this one because this one lends itself well to quite a few examples. And at the time, I took the snapshot. We had 848 open, and it's about a $3,000 swing from that loss. So this is the one that I got raked over the coals on because it went down, and I said it would go up. It's like, well, if I knew for a fact it would go up, you'd never see my fat ass again. Or I would come back and taunt you a second time. Mr. Waddles said there's abundance of opportunity for the man who will go with the tide instead of trying to swim against it. And I've said that quite a few times. And that's my mantra for trend following. Now, this is, as I mentioned earlier, this is a former mystery chart going back about 8 months or so. Nice little Landry light pullback there. Kind of has a bit of a double top knockout-ish look to it. Entries here, stop is here, initial profit target is right there. And you can see it took a while to get there. It took about 2 months, and this is another one we'll come back to. And you bank 1,000 per 100K, you get that stop up to break even, and then you trail a stop on the remainder. Anyway, nice little run. So far, so good. Knock on wood. And we banked the $1,000 again. There's 11,635 open. That's per 100K. So not too bad. About 12%, 13% overall on your account. It's been a pretty good run. I know gold's getting hit a little today, so let's just see how it shapes out. But so far, it's been pretty good 8 months, right? Here's another one, another gold stock, TFPM. Entry stop. I think the KGC is up about 160%. Might be off a little bit from that today. Here's another one that entered and just kind of fell on its butt. And that's the hard part, okay? Living through all these things. I could tell you how to trade. Okay, just trade Landry light pullbacks if you're just getting started. That's all you need to do, right? However, actually doing it is much different than me telling you about it. The map is not the territory. And the map is not the territory applies to life. And a lot of times say, oh, well, all you got to do is this. And well, you know, it's never as easy as it sounds on paper. Anyway, so you bank 1,000, get that stop up to break even. And then it just kind of dies out for a couple of months. But this is where patience, spoiler alert, something we'll get to in a little while, comes into play. Anyway, so decent open profits there. I think 160% on that one. Speculation still alive and well. Now, this is an older graphic, but I left it in here because I thought it was kind of cool because like this USAS, when I took the next screenshot, was up 1,300%. So here comes Mr. Waddles again. There's abundance of opportunity for the man who will go with the tide instead of trying to swim against it. So here's that USAS. It was up 500% on the prior slide, and I forget the date on that one. But as of yesterday, it was up 13.25%. And then if you take a look at the rest of these, the top gainers, you can see 300%, 200%, 250, 100%, 80%, 50%, and so on and so forth, down to about the first 50 or so. Now, of course, there's some losers in here. There's 100 stocks total, but we kick the losers out, we being me, and then we add in some winners. It kind of reminds me of, as I've told 1,000 times before, I think it was in my first book, I went to the gym and there was a little perky blonde behind the counter. And I tend to wear my emotions on my sleeves, you know. And I was like, I was just a little bummed out. Head was hanging low. And she's like, what's wrong? And I'm like, oh, I was like, I'm in a bunch of bad stocks. She goes, what's the hell? I'm buying some good ones. So it's like, you know, what does she know? I have an MBA and I have a degree in computer science. So what the hell does she know? Well, it turns out she's right. So that's exactly what I do with the Landry 100. Now, this Landry 100 is hypothetical, but I can guarantee you every position in here on that tracking date was added based on the closing price of that date. So you could argue, well, slippage commissions, whatever. Yeah, possibly. But overall, it's looking pretty good, even with slippage and commissions. All right, a couple of random thoughts. I posted this on Twitter yesterday. This is a SLV. A market can stay irrational longer than you could remain solvent. That's Keynes. years ago, I spoke at truly was a day traders conference. Usually people are like, oh, it's a bunch of day traders. And I get there, it's nothing of the such. But anyway, it was actually a bunch of day traders. And I learned that one of their strategies is to short the parabolics, wait till something goes absolutely parabolic and then short it. And I can guarantee you that'll work until it don't. But anyway, so far so good. Now, I don't want to talk out of both sides of my mouth, but one thing to be cognizant of when it comes to trend trading and trend trades in general, all trend trades will eventually end badly. And that's another one of those things you need to wrap your head around. Okay, I'm getting beat up like crazy today, okay, in my trend trades, but it happens. And one or two of them have turned around a little bit. Some other ones haven't, but some of them come back a little bit. And if you're watching every tick, as I've said 1,000 times before, you will begin to make yourself crazy. A negative observation has a negative effect on you. Negative observations have twice the effect or more of a positive observation. And as I've said 1,000 times back when I lived in the country, a lot of times I'd get pissed off and go for a walk around the block. It was about a 2-mile block over there, big plots, 6-acre plots or whatever. Anyway, by the time I get back all hot and sweaty and everything and still kind of aggravated about my losses, the losses have come back and I was actually in the black. And I realized that I wasted a lot of that emotional negative energy, wasted a lot of that negative energy for no good reason. And it does impact you, and you've got to learn how to control those emotions a little bit. Not so much control is a bad word, embrace is what I should say. So again, as I just said, never forget that momentum does end badly. Okay, Randall says, there is the exciting investment this week, gold, a crazy move. Let's say you own 40 ounces of gold bullion, and it's owned it for a long, long time, but need over the next few years. How much, if any, would you sell now? And what would you watch for on the chart and sell it? Okay, we can flesh that out a little bit more when we get to the live charts. I would sell some, okay? I'm a big fan, as you saw with the KGC, TFPM, and hopefully for most of my clients, MDLN2, and what else? Glue and some other ones. They take partial profits just in case that's all you get. So I see no problem whatsoever with taking some partial profits in gold and silver. My mother-in-law, she used to bother me all the time, or quite often, like she wanted to know what kind of gold and silver to buy. And so I would give her a list of things to buy or make her a cart or whatever and send her the cart. And she only took one out of the 3 buys. And if she'd have taken all 3 buys, she'd have 6 figures worth of gold and silver in her in her safe. But that's another story altogether. But yeah, lighten up a little bit, you know. The thing now that's a little scary is the dollar's imploding so bad, which is helping the gold and silver rise, obviously, and other commodities. It's like you almost hate to give it up because you feel like that hedge is finally working. But yeah, Linda Rasky once said, feed the ducks while they're quacking. So by all means, Randall, if that is your goal you're talking about, you should lighten up a little bit, especially if you might need the money. Who doesn't need the money? You always need money for something. All right, let's continue those trading resolutions, part 3. I will be patient. Now, here's the thing. Trading done properly can be quite boring. And one thing that I often preach is busy traders make good traders. And the story I've said 1,000 times, and he's often told me I should pay him. But a friend of mine, who's also a client and a trader, active trader, he told me he started making a lot of money lately. I'm like, oh man, what'd you do? You know, is it you find the Holy Grail? What's happening? He says, no, the doctor that was covering my nightly rounds, she quit. And so I'm working literally day and night. I don't have time to fire off day trades. I'm just putting these positions on, and once a week or two, I'm checking in and doing what I have to do, and everything is just going out really nicely. So busy traders make good traders. When I first quit my day job, I thought, oh, I'm going to make so much money because I made an okay amount of money. I didn't print money, but I made an okay amount of money before I quit, which gave me a little bit of confidence. And then when I first started not day trading, but trading full time, some day trading, I lost money, and it's because I was too close to the markets. Be as close to the market as you need to be, but no closer. And I was chasing my tail and trying to catch every zig and zag. Anyway, there's three types of patience when it comes to trading. One is the patience to wait for setups. I think, if memory serves, it was 50 something days with no setup triggers, or possibly no setups. I don't know how many days without setups, but I was being super selective during this period of time. And then you can go back and look at the trading archives and see there's a lot of times when there's nothing to do, and in those times I listen to the database and I wait until the database starts providing me with some viable setups. And that's hard because, you know, we're all under this pressure to perform. And as I said 1,000 times, a lot of times, you know, I'll be in here and things aren't going great or whatever, and I'll go over to the house. I'm in a separate office from the house. And so I go over to the house, and then, you know, my wife's always like, well, you know, we have taxes are due, or this is happening, or whatever. It's like I'm always getting hit with some sort of financial burden where I feel like I got to come back in here and try to pull that money out of the market. And that is a very, very bad place to be. You really have to trade like you don't need the money. All right, so anyway, this was a setup that took 10 days to trigger. And I don't know if it was this one or one like this, but I came in every day. It said alerts or actually orders. I'd put my orders in every day for like 8 or 9 days in a row. And on the 10th day, I just like, well, this thing obviously is not going to trigger, so I didn't bother. And that's one of those million little things, a million little details when it comes to trading. And fortunately, I saw in the Facebook group, somebody said trigger in service stock. And I'm like, oh my goodness, it triggered and I totally missed it. Fortunately, it hadn't gone too far and I was able to get in. Anyway, so it took 10 days to trigger, and that's a long time, just waiting and waiting and waiting and waiting. And then what happens? Okay, nothing. You're 10 days in and you're still underwater. So like the aforementioned gentleman, you're probably saying, F this, you know, this obviously is not going to work. And then what happens? The stock begins to take off very nicely. Now here's the glue we talked about a second ago. This is the one, again, I got right there with clothes on, and just a good looking setup. Lots of Landry light, nice little pullback to the 30 EMA. Okay, so Randall, when gold pulls back to 30 EMA, start maybe use that as one of your points of reference. Okay, well, you might want to begin to think about getting out. Bow tie be another one. Just some sort of have some sort of trend following metric in place, trailing stop type of thing. Initial profit target was up here. So again, I know I'm kind of beating the dead horse on this one, but you can see, let's see, how many days? 1, 2, 3, 4, 5, 6, 8, like 8 days in. And after 8 days, you're down 60 to 86, and that's on 100K, okay? So that's a substantial loss staring in your face, especially because on day one, it triggers and you have a tiny profit and that completely erodes, and now you've got this, you stare at this big loss. And you're kind of thinking like, well, why am I sitting in this stock losing all this money? I should get out. And of course, this is what happens later. They don't always come back. Again, that'd be another one of those, you never see my fat ass again if they did type of things. Now, the other thing is, number 3 was like, you have to be patient once you're in a trade. So in this particular case, this is a KGC, and TFPM is very similar. We've been in these for about 8 months. Now I'm slotted as a swing trader, and that's because that was on 2 of my books, I guess. But in reality, I'll stay with a trade as long as it moves in my favor. This is what I live for, okay? As the politician said a while back, these are the ones, we are the ones we've been waiting for. Well, these are the ones I have been waiting for. All right, number 12, I will keep a journal of my trading actions and my emotions. I was at Charlie Kirk's retreat in St. Lucia a few years back. He had me on as a guest of honor, and it was a great experience, as I've said 1,000 times. A lot of great traders there, a lot of smart people there, and it was really, it's a good thing to do, to get together every now and then, a little FaceTime, and I learned a lot in the process. And one of the guys there said that he actually has a confession journal in addition to his trading journal, and I I tried it for a little while. It was one of the hardest things I've ever done. Now I do admit in my trading journal when I'm doing when I've done some bad behavior or doing things I shouldn't be doing. But the actual confession journal was actually it was a bit of a wake up call. It was kind of hard to do, but I would encourage you, if you're brave enough, get a separate notebook and just talk about your confessions. Now, the other thing too, you have to really think about, and Miss Thomas once said this: don't expect trading to fill a hole missing in your life. And as I've said before, there's always a hole in your life. Right now, we're dealing with Marcy's parents, they're elderly, there's a late stage Alzheimer's hospice type of situation, and so we're trying to work out some care for them, and it's very, there's a lot going on, okay, a lot of moving parts, and it looks like our weekends are going to be tied up for a while, and so there's a lot of things that are happening, okay, and a lot of expenses too, like, okay, how are we going to cover this, and so on and so forth. So there's always going to be this hole in your life, and you can't expect the market to fill that hole. So Ms. Thomas is right. So I would encourage you to figure out what's eating you, Gilbert Grape. And I always forget, Gilbert Grape was not DiCaprio, it was actually Johnny Depp. If you want to waste some time of your life and see the world's worst movie ever, watch What's Eating Gilbert Grape. I could sum it up. A lady got too fat and died and had to cut a hole inside the house and drag her out. And DiCaprio played a mentally challenged child. I think that's it. I just save you some time. So you want to document. And one thing we'll get to probably at the end of the 26 resolutions is going to be, and I'll beat the dead horse on this, is going to be to do your morning pages. I have this digital tablet here. I absolutely love it. I've been using it for a few years. And I wake up every morning and I write 3 handwritten pages in that. I try to stay analog as much as possible. Lately, it's kind of tough. Where's spot silver? Where's spot gold? Okay, how are my stocks doing this morning? What are futures doing? I do quickly check it on the phone, but I try to minimize the amount of digital time that I spend early in the morning. There's a whole science behind this, and I'm kind of backtracking into this, but there's a whole science about how many things we're bombarded with daily and how evolution has not caught up. Evolution is very, very slow, okay? So our minds haven't caught up with all of this bombarding of information. The average person today consumes more information in one day than the average person did 100 years ago. And I'll have to look them up. It's in a book called Limitless, which I haven't finished. And it's a good book, but it's one of those books where the author tells you, I think it was 50 pages or whatever. He keeps telling you what he's going to tell you. Well, just tell me, okay? I've been working on another book for years. And early on, I said, look, I'm not going to tell you what I'm going to tell you. I'm just going to tell you, I might beat the dead horse a little bit on some concepts because it's needed, but I'm just going to tell you. But anyway, the book it's worth reading. Again, if you can get past the first whatever pages. Anyway, his point is that even going back 30 years or 40 years or even 20 years, the amount of information that we're getting bombarded with compared to what it was is just absolutely ridiculous. And our brains really aren't made to deal with that. And all these dopamine rushes and all these new terms that are coming out like death scrolling and all that really take their toll. And I've been really trying to keep an eye on doing that. Very important. But anyway, you want to document. And the point I was trying to make there, believe it or not, I did have one, is to stay analog when you wake up. Maybe try to stay analog for about an hour. Okay, do some writing, have your coffee, do whatever, go for a walk the dog, whatever. But try to stay analog for a while. Let your brain warm up to this bombardment, if that's a word, that's getting ready to happen. That deluge might be a better word. So you want to analyze the process, okay? Now, you could have either a positive outcome or a negative outcome to a trade. Now, if you had a positive outcome, this is where it gets important, is kind of a deliberate practice, good repetitions, as I often talk about, versus bad repetitions. If you had a great setup and you planned this trade That would be a good rep. Okay, very important to get good reps in. That's the secret to success, getting those good reps in. Okay, here's my setup. It's the stock is persistent, it's accelerating, it trades cleanly, it's volatile, but not too crazy volatile. And this is where I'm getting in, this is where I'm gonna stop out, this is where I'm gonna take my initial profits. I might use a tiny bit of discretion, as I mentioned earlier, but for the most part, I'm going to follow this plan. Now, if you have a negative outcome, and you need to ask yourself, was this a mediocre setup? Was I influenced by the extraneous? Was I bored? Okay, was I trading for recreation? Was I trading because I have to? Okay, and that's one of the things that I've gotten into quite a bit, talked about quite a bit, is the fact that in any other profession, you can't sit around, and this was from a psychiatrist client of mine that explained this to me. In any other profession, you can't sit around and wait for that fat pitch, that perfect client to come along. You have to take whatever train wreck comes along, even though you might do more harm than good. An example I use there quite often was this doctor friend of mine, client also. He sent me I asked him for a picture of it to make a point, but he sent me a picture of a woman's leg that was like this big around, and I don't know whether she was just, as I said, I think last week before, a sturdy girl, or it was infected that bad, but it was black and it was nasty. It actually kind of, I'll actually kind of gag a little bit if I actually think about the picture. But anyway, he's like, this is what I'm dealing with this morning. He says, if I try to operate on this woman, this infection could spread and she could die, or maybe not die, but at least lose a leg, okay? Possibly, right? Or if I operate on her, if I don't operate on her, she's going to die, or at least lose a leg. So it's like, if he does, it could cause more harm than good, but he has to, so it's kind of that dilemma. And hopefully I got that all right. But the psychiatrist was explaining to me that you have to take whatever train wreck comes along, even though you trying to help them can actually do more harm than good. Anyway, if you did take a mediocre setup and it was a positive outcome, this is where people get confused. Okay, if they made money on something, they're like, well, I made money, and it's like, okay, well, yeah, you did, but the market just rewarded some bad behavior, and you got to be really careful when you're doing that, because that's going to really bite you in the ass down the road. That's one thing I can guarantee. And you might just be in a market where everything's going up and you can get kind of sloppy and make a lot of money and you're all excited. And if you keep doing that, you're going to blow up at some point. Now, if you did have a positive outcome and you traded with all these bad behaviors, mediocre setups, etc., as Anthony Bourdain once said, mediocrity is the greatest sin. And it is, especially when it comes to trade. But if you did these bad behaviors and the market gave you money, rewarded that bad behavior, you need to thank the market gods, and then you need to say, okay, shame. Okay, I'll do this once. Maybe I'll give away a tiny bit of that money to charity or something, just to kind of remind me, these ill-gotten gains are teaching me to trade poorly. All right, we're out of that. Okay. Now, if you have a negative outcome and you did all that bad behavior, then it's like, okay, well, I know I did the wrong thing. I got punished for it. I should have gotten punished. I could use a good ass whipping, like my cousin Vinny. Now, let's say you have a negative outcome and it was a great setup. Well, that's what shit happens. So the Annie Duke thing that I think I might have mentioned a second ago is she talks about resulting, and that's a very dangerous thing to do. So in her book was on poker players, thinking in bets, I believe. That's the one I read, my favorite. I have another one I hadn't gotten into it, the one about how to decide or whatever. But anyway, it's probably a good book. It's a workbook type of book, and I really don't get into workbooks too much. But anyway, she talks a lot about resulting, and that's when you, regardless of what you did going in, you really have to look at the process going in as opposed to what came out of it. You have to look at both, obviously, but if you have a positive outcome and you recognize you had bad behavior, then that's a good thing. Now, if you have a positive outcome, even though it's bad behavior, you think, well, I'm just God, then you're going to get in trouble longer term. That's the point I'm trying to get to. So if you have a negative outcome with a great setup, then you have to chalk it up to shit happens. Okay. Somebody gives me a hard time on a stock. It's like, well, did you get these other 6 stocks or whatever, or even 1 or 2 big winners? It's like, well, no. It's like, okay, well, then that's all part of the process. Losses come with the games. Okay. But if you did take a good setup and you did lose money, by all means, of course, do the postmortem. Always do the postmortem. That's one of the resolution. But if you could go back and honestly say, I would take this trade tomorrow, then congratulations, you've become a trader. That's what trading is all about, is finding a great setup, taking it, and let the chips fall where they may, provided, of course, you're following the plan. Now, one thing that, what's his name, the psychiatrist for trading, it'll come to me, Mark Douglas, used to say is that a bad salesman will make a few sales calls, get rejected, and then drink his lunch. Okay. A good salesman will make a few sales calls, get rejected, go get a big cup of coffee and sit down and say, okay, next, because statistically he knows he's getting closer to the sale. So if you are trading well, and believe me, you really have to be your own judge. And once you're at this a little while, you'll know whether you're doing the right thing or not. And say, okay, these losses statistically valid. If the answer is yes, then you have to continue on, as Mr. Churchill once said, without any loss of enthusiasm. Okay. But if the loss, getting to Mr. Einstein, definition of insanity, if the loss was because you did something stupid, okay, well, then tell yourself, well, I'll do that once and learn from it and don't make that same mistake again. I know it's all easier said than done, but it really isn't that complex. Okay. Now, if you have an FES setup, then by all means trade. Okay. And if you don't, then you want to go back to the waiting for the FES setup until you do. That one little piece of the slide right here, it's like all you got to do is that, right? I know, easier said than done, but all right, number 13. You never forget, you got one job. I told myself before I went live, I'm not going to tell the story again, but I can't help myself. My mother-in-law, they were selling their car. It was a Mercedes. And, German cars are great until they're not. Every time I own one, I swear I'll never do it again. But anyway, she had like a broken door handle, or it just looked crappy. So I figured out how to change it. And whenever you go into a job, just like when you go to trading, okay, you got to figure out what the gotchas are. Okay, and that's one thing I do now that I'm a little older, a little bit more mechanically inclined, is I go in and figure out, okay, what's my job and what are the gotchas for the job? Well, this job looked pretty simple, except there was one part, and by reading the internet, and I sound like the old people, the internet, but watching videos and such, there was one part where you had to make some connections, and it was a little fiddly, and it would require both hands for that, and then the door panel had to be held up. Otherwise, if it fell, it would rip out the electronics and the wires, these ribbon cables, which are real fragile, especially on an older car like this one was. And it would be a repair that was near the cost of the car. So, good deed goes unpunished, right? So I'm thinking, okay, this is the only gotcha. I think I can handle it, especially with my wife, Marcy. Marcy and I, we nicknamed ourselves the MF contractors because we curse a lot. We curse a lot at each other when we work on something. But in the end, it's like we get it done, okay? And we worked on so many things, especially when you live in the country. There's a lot to work on out there. But we work well together after we get the initial kind of frustrations out. And once she kind of gets what I'm doing. So in this particular case, she goes, you need my help? I said, I'm going to need your help at one point. But until then, I'd probably be better off working by myself. And at that one point, this is what I need you to do. Explained everything to her. She was on board. Well, I went inside and I got her, and she walks out the garage. And right at that time, my brother-in-law walks in. And she goes, oh, well, Chris is here. He'll help you. And so I told Chris what we had to do. And so I almost had the little handle hooked up, and then he drops the panel. And he was on this side of the window, and I was on this side. The window was down. And I went over into his ear like this, and I said, "You got one effing job." Yeah. I know I have this. I don't have a filter all the time, or none of the time. But anyway, never forget in trading. Dave, where you going with this? Okay, you got one job. Okay, you got one effing job, and your job is to make money. Okay, and I think the best way to tell you what your job is to tell you what your job isn't. Okay, now these don't come along every day, but when they do, it can make a really big difference. So let's talk about what your job isn't. Your job isn't to look smart. When I was first called a trend following moron, I was depressed because it was a trader I really respected. It's kind of a long story endless, but I really respected him. And he said some nasty things. He said I would die penniless, and so far so good. I'm not dead yet. But it really bummed me out. And I went through all the stages of denial. Like I said a minute ago, I'm a very emotional type of guy. And I went through denial, and then I went through anger. And then at some point, I'm like, well, wait a minute, Dave. I was trying to catch some tops and catch the bottoms, and I was losing money. And my trend positions were doing okay. It's like, well, maybe I am just a trend following moron. And I spun that shit into gold, so to speak. It's like this major negative for me, this big impacting. It was like a kick in the crotch, actually turned into something positive. It's a T following moron is my X handle. Okay, and I embrace trend following moron. Okay, I have clients that call themselves fellow TFMs. I love that. And as a trend following moron, your job is just to follow along. I know, again, easier said than done. Your job is not to predict the news, okay? Or more accurately, the reaction to the news. I had one client, probably the same guy that's bitching all the time, but I had one client months back. He's like, well, everybody knows the tariffs are going to do this or do that. I'm like, okay. Well, I think that was like way back at the beginning of the year, and the market has gone up like 30 or 40% or whatever since then. And had I sat back and like, oh, you're right, let's not do anything because they're tariffs or whatever, we wouldn't have made any money. And the thing is, it's not the prediction of the news, but the reaction to the news, and that's even harder to predict than the news. Now, your job is not to play themes. Let the themes find you. Okay, and I didn't know gold was going to go to 5,000 and change, or silver was going to go to $100-something an ounce. I just saw a setup. Okay, that little daylight pullback, or Landry light pullback is what I now call them, and I took it. And now all of a sudden, I'm playing the gold theme. Okay, an example I beat the dead horse on, or beat to death, I should say, is when I bought Academy Sports. I think it's ASO. It was an IPO. It pulled back. It was a setup, and I'm like, "Well, that's a good looking setup." But a brick and mortar retailer, I can't do it. I got to do it. It was such a pretty setup. So I took the setup, and then it turned into one of my biggest trades of the year for me and my clients. And the reason was we ended up by accident playing a theme, and the theme was that people were sick of being cooped up in their houses with this COVID thing, and they wanted to go out and get some fresh air and do some things outside and buy a kayak or whatever else, a bike or whatever. And so Academy Sports all of a sudden took off. Now, if you would have tried to figure out that theme on your own, maybe you would have gotten it. But for every theme you hit, I can almost guarantee you 10 of them won't, okay? I know someone, I don't want to throw him on the bus because he's a nice guy. I like him a lot. And he has some private equity events, and he's rolling dice on quite a few of these things. And so far, none have hit. And maybe one will hit someday, and maybe he'll be vindicated. I hope he is. Okay, I really hope he is. But when you're trying to play a theme like that, it's kind of like what Greg Morris said: all predictions about the future, and a lot of shit can happen between now and then. Okay, so that's the problem. So you can find themes through technical analysis, or more accurately, let the themes find you. Okay, we're long gold. We're long some biotech stocks. Biotech was going up months ago, so we're long some biotech stocks. Okay, maybe that trend will continue. Maybe it won't. Little things like crypto stocks started rallying a while back, and it was because the crypto companies have the ability or the computing power to put some of their hardware over to AI or whatever. And so that was a theme that worked for a little while, even though crypto, it didn't make any sense. Why are crypto stocks going up? So let the themes find you. And that's just simply through setups, simple setups, okay? Your job isn't, never trade for revenge, either because you just lost money in the market or because somebody pissed you off. That's another one of those extraneous things. It's like, I'll show her, your wife, if you have a fight with your wife, significant other, or both, then you might say, well, I'm just coming to my office and make a lot of money, trading for recreation, entertainment, because you're bored. Obviously, I just beat that dead horse. And you're going to be bored a lot trading, believe me. Trading done properly is boring, and it should be. To make income, now that's kind of a fallacy. I don't want to say on Wall Street, on Guru Street. A lot of these people are like, oh, you can make this income, and a lot of that stuff is reverse to the mean type of trading, selling options, call strategies, stuff like that. What'll happen is that'll work until it don't. And I've seen some really ugly stuff out there being preached, and they're going to blow up at some point and blow up their clients too. Now, this is the thing. You have to reward yourself for following the proper process, regardless of the outcome. I forget who it was, but Linda Raschke once talked about this trader she knew. And at the end of the day, he would get his staff together, and he would say, how well did we follow the system today? He didn't say, did we make money? Did we lose money? He would say, how well did we follow the process? And they would, at the end of every day, they'd have a postmortem, and they looked at whether or not they followed the process and what happened. And that's I talk about the turtles a lot. And people are like, what are the turtles? It's like, I guess I'm dating myself now, but turtles were the first market wizards, and I think they mentioned in another one the market wizards too. But the turtles were a group of traders put together based on a bet on whether or not, what's it called, nature and nurture, whether or not they could teach these people how to trade. And turns out they did incredibly well. They were in the right markets at the right time, which is another story altogether. But if you read, I didn't read any books written by other people who weren't turtles, so I have a bit of a problem with that. But that's another story. Curtis Faith wrote 2 good books, Trading from the Guts, where he mentions the turtle stuff quite a bit. And I think it was The Way of the Turtle. But it was really enlightening, and it was kind of interesting is Dennis would look at, and I guess Eckhart too, they would look at the process and not so much the losses, for instance, by following the process. And one of the examples was, I mean, you can get fired for not following the process. You wouldn't get fired for having losses. So one of the traders got called in. There was a signal in crude, and every trader took it except for one trader, and it failed miserably, okay? So they didn't call in every other trader and ask them why they lost money. They called in that one trader and like, why didn't you take the trade? And he had some sort of excuse with, I think they halfway bought it. He's like, well, when I'm doing my analysis, if I get to 3 pages without a trade, I don't take any trades. It's some little rule he had kind of made up on the side. So maybe that's part of the process, proper process. I don't know. But he was put under scrutiny for not taking the trade, for not following the process. So very important to follow the process. By the way, market is a bad teacher. This is an AI generated image, and it looks eerily similar to my life, which is kind of crazy. But anyway, the market can be a really bad teacher. And there's a lot of things that'll work until it don't. Now, you have to learn to love the process. I like looking at charts. I like trying to figure out markets. I like having that theme to come to me. And of course, I like making money, right? He who seeks only silver will never be happy with silver, and that's equated to Ecclesiastes 5:10. I first read that in Viewpoints of a Commodity Trader. I would recommend you read that book. I think the guy's name is Roy Longstreet. Okay, really good little book. That's the one I gave away. Then I found out it was a rare book. So I bitched about it so much. One of you guys sent me, I didn't know it was reprinted. It sent me a reprint, which is very nice of you. And I still have that here. But yeah, do read it. Get the reprint. Don't try to buy the original. Now, if you did everything correctly and the trade failed miserably, again, then chalk it up to shit happens. The resulting, which I don't know if I closed the loop on that, is very, very dangerous, as Miss Duke calls it. It's saying, okay, if I had a positive outcome, then that's all good, okay? But the bad thing is that market could be a bad teacher. That's the previous slide of my wife doppelganger there. The market could be a really bad teacher, and that's what kills a lot of people, is they have this initial success by doing some bad behavior, and then they think, well, but it was working so well. It's 5 of the most dangerous words on Wall Street. What do you call it on a tombstone? Epitaph. That's many of those on the tombstones at the end of the cemetery at the end of Wall Street. You got to watch your phraseology when it comes to this or anything else you do. Obviously, ask yourself, how do I get better versus why do I suck? Now, you want to constantly look at everything to make sure you're following the proper process, and you have to be your biggest critic. And probably next week or week after, one of the resolutions is going to be accountability. And the story I've told there 1,000 times is this one client who was doing some bad behavior, but he was following my service and doing fairly well with the service. And at one point I said, look, what if you showed your wife my trading service every day and told her, I'm just going to follow this. And this guy's not always right. He's often wrong, but never in doubt. Okay. There will be losses. It's one of the things I can guarantee. There will be drawdowns, but over time, he's going to catch a few big winners like these gold stocks or whatever, biotechs or whatever else. But it will take time and it will work longer term. You just have to be patient with me. And I'm going to follow it every day. I'm going to let you know how I did following the process. And he said, oh no, that went into marriage. So it's like, that's the, you know, I could save myself a lot of time here. It's like, you know what you're doing wrong, you know what you're doing wrong, as I've often said. Again, waiting patiently is part of the process. Now, provided you've had some experience through a variety of conditions, you can't fall into the knowledge gap. And that's more Mark Douglas type of speak. Whenever you lose on a trade, if you're more of a novice type, you think you did something wrong. You might not have done anything wrong. You feel like there's some sort of knowledge gap. And if only you had that knowledge, you could figure all this out and you would no longer have losses. That's not how it works, Beatrice. That's not how any of this works. All right, practice negative visualizations. As I'm putting this slide together, I realized, you know, the last couple of days of like walking the dog in between whatever's going on, it's like I was in the woods with her and I started thinking about this position I just put on and how much money I'm going to make it. And it's so far, it is failing miserably. It's come back a little bit from this morning, but it's pretty ugly, okay? And the flip side of that should have been like, okay, this thing could end badly. What am I going to do with that? Am I going to stop out? Or am I going to hope? What am I going to do? So negative visualization, you have to be willing to know that bad things will happen. And I think it was, I don't know who, I think it was Greg Gutfeld was talking about, like early in your career, you think all this great stuff is going to happen, and occasionally something bad's going to happen. But really, it's kind of the flip side of that. It's like you have mostly bad things happen. I know I'm being negative here, but hear me out. And then occasionally you have the good things. Well, it helps you to appreciate the good things, and it's much easier if you're willing to expect delays, you know, and willing to deal with bad things. Anyway, Marcus Aurelius, today I will encounter people who are selfish, rude, and arrogant. What was Jimmy Buffett? What did Jimmy Buffett say? A-holes are born that way and will be that way for life. But I will not let it disturb my peace. Every morning, take 30 seconds and remind yourself that you will face negativity today, but I will not let it control me. Easier said than done. These Stoics have a lot of good info. We suffer more in imagination than reality. Okay, my wife's name is Marcy. Her birth name is Louise, and she became Marcy because one of her mother's friends, when she was a toddler, came in and said, she said, you can't call that girl Louise. I have this girl in my class who's absolutely beautiful, and your child is beautiful too. I'm going to call her Marcy because that's what that kid's name is. And so her everyone knows her as Marcy, and every now and then she'll be on the phone and they're like, okay, this is Louise. And my friends will be like, who the hell's Louise? Yeah. But Louise is tough, and she can handle the situation, and she's stoic and just an amazing individual. And Marcy's an amazing individual too. But when it comes to worrying about the situation and dealing with the situation, she suffers more in her imagination than reality. We all tend to do that. Okay, that's why Seneca said this, I'm guessing. But when the situation comes, when push comes to shove, Louise shows up and gets the job done. So that's kind of like a running joke with us. So we probably all need a little Louise in us. Now, negative capability means anything can happen. And this is along the lines of what Mr. Keats once said. It struck me what quality went to form a man of achievement, especially in literature, which Shakespeare possessed so enormously. I mean, negative capability, that is, when a man is capable of being in uncertainties, mysteries, doubts, without any irritable reaching after fact and reason. The aforementioned Academy Sports trade, okay? Had I reasoned through that, I would not have taken that trade. Who wants to buy a brick and mortar store in this day and age, okay? Well, it turns out if I'd have followed that, I would have been wrong. So that's a lot of technical analysis, is when a man is capable of being in uncertainties, mysteries, doubts, without any irritable reaching after fact and reason. Follow the system, follow the process. All right, let's hop into crypto real quick. And if there's anything you guys want to talk about, or questions, or any individual crypto stocks, let me know. All right, let's take a look at Bitcoin. One thing I was looking at, I was looking through all my old slides to try to find some material to go with these resolutions. And I found a tweet that I put out. It's always darkest right before it gets more dark. And I think that was like at Bitcoin 90 something thousand. And today, obviously, it's down there at 84,000. One thing I was looking at recently too is this 30-day EMA is your best friend, okay? And it can really, especially if you combine it with Landry Light, which we'll do real quick. If you combine it with Landry Light, it could really help to keep you on the right side of the market. So Randall was asking about gold. Let's just pull up gold real quick. We'll pull up BDF, okay? So if gold trades below the 30 EMA, you start having a substantial amount of Landry Light, then you might want to think about exiting, okay? But you can see that gold has doubled without doing that pretty much the whole time. So that one little simple metric might help you to stick with gold. Now, you're going to have to ride out some serious drawdowns, okay? And now that it's so stretched away from the moving average, this thing could come maybe all the way down the moving average, like a Landry Light pullback, which is a long ways away, would be like $1,000 in underlying commodity, and still be in an uptrend, okay? And that's just something you have to live with. And I've given many speeches where I showed like a KGC or whatever, and let's say you just bought this GLD. Well, look at all these big drawdowns along the way without any really major trend reversal. Now, the other thing you might want to do, well, let me put the Bitcoin in first before I forget. But the other thing you might want to do is keep an eye on if I can make this come out, BTC. Oh, here we go. Keep an eye on the bow tie moving averages, and we'll take a look at those in just 1 second. All right, so here's Bitcoin. So when does anybody know why you can't, there it is. Okay. But you can see lots and lots of red down here, okay? And only a little bit of green upside Landry light. So you can see nothing's perfect, obviously, but it does a really good job of keeping you on the right side of the market. So let's take a look at gold real quick, GLD to commodity, and then we'll pop back to crypto. Any pairs you guys would look at? I doubt there's anything out there. It's just not a whole lot happening. Okay, so with gold to commodity, you haven't had negative or downtrend proper order, meaning that 10 is less than the 20 and 20 is less than 30 in the moving averages. 10 simple, 20 exponential, 30 exponential. In a long, long time, all the way back since the beginning of 2025. Okay, so for over a year, you've been in uptrend proper order or yellow, which means that one of the moving averages is not in uptrend proper order, but the other ones are. Okay, so that would be another metric for you. That might be a little too slow if you're looking to peel off a little bit, if you want to take a little money off. But if you have 40 ounces of gold, you know, congratulations. Now might not be a bad time to just take a little off, you know, and see what happens. All right, getting back to crypto. So Bitcoin's not doing too well. Ethereum's not doing so hot either. So as I preach week in and week out, sometimes when Bitcoin is doing well, as a general statement, you could just come in here and buy the crypto pairs that are going up. Right now is not one of those times. So I would leave crypto alone for now. Do your homework though. You know, every now and then, see, I have him, you know, one of the things I always say is do your homework, do your homework, do your homework. And I miss this one here. This looks like something I probably would have taken. You've got a nice little kind of daylight takeoff, Landry light takeoff, a little bit of a pullback. That looks pretty good. So I might have caught that trade had I been doing my homework. But lately, it's just like it doesn't seem like it's worth doing. But you know, do as I say, not as I do. And I plan to get back into crypto heavily once conditions improve. But the reality is, I should be looking at these every day. So, all right, little confession there. All right, let's shift gears and get into stocks real quick. And if there's any individual stocks you want me to look at, I'll be happy to do that now. All right, let me show you something real quick to show you that I was telling the truth. Momentum ends badly, okay? So take a look at some of these great momentum stocks on the Landry 100 today. I know I often show all the big winners. I tend to tweet out the big winners every day. But sometimes you lose money, right? Reminds me of a joke that's inappropriate. Okay, Randall added to his. Okay, thank you for the input. I am a trend follower with following stops. I use EMAs. Nut gold is up so fast that I've become emotional and I'm afraid of following my paper profits. I need to get away from the emotion and follow indicators that you go. Yeah, and now the other thing you could do, and this is kind of the opposite of just scaling on out, whatever. But you could certainly put in a limit order well above the market on something and see if it gets hit. Okay. And take some profits at some ridiculous level. But anyway, the point I was making here is momentum does end badly. Now these might just be correcting. Some of these might come out later today. Remember, this is actively managed, and sell them and buy some good ones is what I believe in. But most of these still look pretty darn good. But yeah, the drawdowns, it happens. Let's see what's on the upside today. We've got a few going up. That's not too bad. Yeah, that looks pretty good. Now, being willing to survive those drawdowns, I mean, to take a look at holy crap, when did that happen? Now it's 1,200%. I didn't realize it was that high. So that's off its best levels. See, it's getting whacked today a little bit, but this thing is up 1,200% since I added it on the 4th. This one's up 400%, getting whacked a little today. Again, all trend trades eventually end badly. Yeah, you could put in some, maybe just for like an ounce or two or whatever, just for S&Gs, put it an order $1,000 above the market and see if you could peel off a little bit there and let the market pay you. That's a feed the ducks while they're quacking type of thing. All right, let's take a look at the overall market. And again, if you have any questions or individual stocks, and let me double check, see if my YouTube crowd is asking anything. Oh, quiet over there. All right, let's take a look at the overall market, and we'll drill down a little bit. S&P 500, kind of an ugly day, but we've bounced back nicely so far. Do I have anything short left? I don't think so. Nope, I'm flat on the intraday stuff. And yeah, the portfolio is not looking as bad as it was earlier for sure. Yeah, it happens, right? But yeah, this is a nice little recovery so far. So far, so good there. We did come down to the 30 EMA. But that's okay. Now, we've been a little choppy in here. I'd much prefer a market that looks like this back here. Nice orderly uptrend, as opposed to all this chopping around. Now, one thing that I preach quite often is never forget about your net price change. So look at where we are now, or maybe this morning would be a better example, but look at where we were this morning, okay? And look at where we were way back in October. So if we'd have closed down here, God forbid, this market has unchanged for November, December, January, 3 months, okay? And that's not a good thing. Longer term, much longer term, still an uptrend. Short term, medium term, a little choppy. NASDAQ's a bit of a bummer because it was stuck below this little resistance here. It popped out yesterday, came right back in, did close higher though, and just off all-time highs. And today it got spanked really hard. They're blaming it on Microsoft, I suppose. Let's take a look at that. Okay. So this would not be an opening gap or reversal that you would play, obviously, because it's in a downtrend to begin with. Leave it alone. Do not try to catch that falling knife. Rusty 2000. Rusty 2000 finally kicked it into gear. It's the best looking index of them all. Look at that. Nice persistent uptrend followed by a pullback. And it's been wide and loose and kind of all over the place for a while. But now it's looking pretty good. Even with today's sell-off, this is a nice little knockout type of move. A lot of commodities have been running. It looks like they're kind of beginning to correct a little bit after some extreme FOMO kicked in. Okay, that's copper. This is commodities in general. You can see right here, brand new highs. These commodities are really at high levels. The dollar has been getting creamed. The pound's been doing well. The euro's been doing well. Now, as I preach, learn intermarket technical analysis, but don't try to put it at work. Okay, just kind of use it to give you casual observations. And there's certain relationships, like a weak dollar is good for gold because gold is dollar denominated, ditto for oil. Okay, that's why you're seeing oil prices rise and gold rise. And one of the reasons is because the dollar is weak. Be careful with intermarket technical analysis. As I preach, the markets can decouple for a long time, and sometimes they can invert for a while, okay? But as a general statement, that's one relationship that you could look at, is the weakness of the dollar is, yes, helping to support the gold stocks. Biotechnology off a little bit recently. It's kind of getting choppy. Longer term, still an uptrend. You know me, I like to see a breakout and not look back for a while. Software has been abysmal. Okay, this is a perfect example of it's always darkest right before it gets more dark. And this is why we haven't been trading software stocks, because they're going down and we're trend following morons. We're not going to try to outsmart the market. Healthcare providers broke down recently. That's looking kind of ugly, big, nasty gap. There, back to the upside. Defense pulled back a little today, but looks pretty good. Look at this nice breakout slash uptrend slash pullback. That's looking pretty good. Lithium selling off fairly hard today, but that's kind of a knockout move. Nice trend remains Intact. Agricultural commodities have been banging out new highs lately. Dollar's probably helping that too. Natural resources, look at that. Opening gap reversal today, but looking pretty good longer term. All service has been doing pretty good. Nice little run. Their major drivers got whacked yesterday a little bit. I'd like to see us close this gap. Longer term, still in an uptrend. This is just like a bit of a warning sign here. Let's just see what happens. But longer term, still good again. But shorter term, that gap is a little concerning. Platinum, palladium, these metals looking good. Rare earths looking pretty good too. So far, just pull it back. Look poised to make a new leg higher. Might be maybe this afternoon I'll be buying some metals. Who knows? We'll see. Sky computing breaking down. That's looking kind of ugly. Silver, bam, look at that. Just absolutely amazing. And it's come back from this opening gap reversal. So far, so good there. Semiconductors, outside day down, but coming back nicely today. So today might be a really nice comeback kind of day. I came into this presentation short a bunch of these areas by being long the stocks, like the ETFs, like JDust and what else? Success and Gush to a lesser extent. And then they've all come back nicely. Got stopped out, drip, I should say. Anyway, but they're coming back nicely. So it could be an okay day by the end of the day. And this is another case of go walk around the block. You know? Solar stocks, I'm not a huge fan of solar stocks, but hey, if they start trending, I'll buy them. I don't care, right? A friend of mine years ago, before I was in this business, so to speak, said that if they found out that he kind of talked like this too. If they found out that intravenous drug use was on the rise, he would be buying hypothermic needles. I'm not quite that bad. Yes, I am. Anyway, uranium, we'll talk about that. Dollars weak. Take a look at the energies. Look at that. Banging out some new highs, a little bit of vigor. Financials looking kind of ugly. They've bow tied to the downside. And then metals and mining, as you expect, doing really well. Today notwithstanding, but again, coming back from the lows. All right, I think that's it. Any questions? I'll give YouTube a second to catch up. And while we're at impasse, obviously, I want to thank everybody for coming today. I appreciate you taking time out of your busy schedule. Anything unanswered, Davelandry.com. I'll see most of you guys and girls, I think, here in Facebook in a few minutes. Everyone else, have a great weekend. Hope to see you again next week. And may the trend be with you. Thank you. Thank you so much. Oh, you're welcome.